Manish Gunwani is with us, head of equities of Bandhan AMC. Manish, good to have you with us here. Manish needs no introduction, market veteran, seen many cycles, and of course has run large sums of money at various institutions earlier. Prashant here, Manish, as we were saying, right, some of the so-called macro variables are quite adversarial, but this is a different time in that sense because it's no one's case that it's positive. All this is positive for emerging markets. It's negative, but within emerging markets, India is being favored quite a bit. We've heard that repeatedly from both global investors and local investors as well. So, are you still deploying, Manish, or are you in the camp which is actually raising cash? Because there is that cohort of people as well.
So, Prashant, we are not too much into cash. We are deploying whatever money we get. We see pockets of opportunity, although obviously markets have run up. Maybe tactically there could be a correction because some of the tactical indicators are looking stretched. But from a medium-term perspective, we still think there are a fair amount of pockets where given that the domestic economy is doing well, given that our relative position, as you mentioned, within the emerging markets looks very robust. And also, I think that globally liquidity will be reasonably good going forward because while nominal interest rates have gone up, I don't see too much of high real rates. And I think that is what can really slow down economies and produce earning downgrades, etc. At this point, I think while nominal interest rates are a challenge, but the fact is that there's a fair amount of money moving globally from bonds to equity is my sense. So in that sense, liquidity is not too bad for equities, and I don't think it will become bad going forward. So overall, from that perspective, is it a distressed market where you will get a lot of multi-baggers? I don't think so. Is it a market where a lot of sectors will do well? I don't think so. So I think there are specific pockets you need to find where there is a reasonable earnings momentum and long-term fundamentals like return on equity and terminal value are decent. But I think it's going to be, I know it's a cliche, but I do think it's a stock pickers market.
No, I completely agree with you, Manish, because you're seeing it in the profile of stocks as well, right? There are certain sectors that are coming back in a big way. For example, let's just pull up the stock of Coal India. It's been the biggest mover this month. I mean, it's a gain of 30% almost in a single month. I haven't seen Coal India do that in a very long time. And I guess it's also because, the power demand has picked up in a big way, and there is this expectation that there'll be a further surge in power demand, and thermal power generation is all set to increase. So these are certain pockets that the street is latching on to. And of course, valuations for some of these companies like Coal India are not that demanding compared to peers. Would you agree with that? And is this a space to, jump onto despite the rally that we've already seen?
Yeah, in fact, I think probably the most exciting segment in the market today is this entire power/energy transition space. And so whether you're looking at domestic demand supply in terms of power, it does look like India will need a very strong capex cycle in power. And it's also getting married to this whole global wave of transitioning to renewables, which needs a lot of investments in the grid as well. So the entire value chain in terms of, let's say, the power financiers, power equipment, utilities, I think that's probably the best place to be right now.
Hi, Manish. Good morning. Nigel on this side. Manish, when you joined us the last time around, you spoke about a couple of domestic themes that you like. Domestic consumption, I recall, domestic cyclicals. On the capex side, as you just mentioned, power as well as healthcare and pharma. Do you want to revise this top 4 themes that you're playing? Power's already out of the way. You want to add 3 more?
Yeah, so I think rural consumption coming back via segments like two-wheelers, microfinance, we remain positive on that. I think US generic pricing cycle turning around, that also, I think, looks still quite, there's decent potential in that as well. Maybe the other thing which we are having decent exposure is the real estate theme. Now, the real estate theme, in terms of demand supply, probably now that oil has gone up and India's macro probably not as robust as 3 months back. But I think the added advantage in that theme is the consolidation on the supply side. Again, it's been talked about, it's been playing out. But given the addressable market opportunity, and if that consolidation keeps happening, I think some big companies may emerge out of that sector. So yeah, these 3-4 themes are what we're still banking on.
Okay, the 3-4 themes are what you're still banking on. Got that. By the way, I also wanted to mention L&T is actually a big mover right now. It's up about 1.5%. It's hit that 3,000 rupee mark, so that's a fresh 52-week high for L&T. And the market cap of L&T has now exceeded 4 lakh crores, so almost 4.2 lakh crores in terms of market cap for L&T. In this theme, I mean, we spoke about power, the utility space, but even the capital goods names, right? It's a big comeback that we've seen. And UBS put out a note this morning where they're saying that L&T is now focusing not just in the domestic market, but there's a big export focus as well. So is it too late to jump in here, or do you think that in these names as well, there's lots more upside?
So I'm not going to talk about specific stocks, but yeah, I mean, this entire energy transition theme also is leading to a lot of capex in the Middle East, because obviously Middle East also has a big initiative towards renewables as well as oil exploration and extraction at these prices. Obviously, Middle East is making a lot of money, right? Oil at 95, 97. And that obviously will translate into very healthy capex in that region as well. And overall, globally also, I think what we are hoping to see with some of our stocks is that there is a lot of optionality, because apart from demand supply, you also have to remember that a very big supplier like China is facing geopolitical issues. So if India can emerge as a big supplier of power equipment, I think that is an added optionality which may boost the return on some of these stocks.
Yeah, Manish, just hold on to that thought. I just want to pull up Tata Investments. Just pull up the intraday chart of that stock. It's up close to around 6%. Volumes are massive. And if you look at the last 1 month chart, the stock is up 40%. Tata Investments, we don't talk about it very, very often. I think it's hit a fresh 52-week high as well, moving to the high point of the day. Manish, just throwing this out to you, any of these holding companies, how do you view them? Because some of these themes have played very, very well. Whether you're looking at a Maharashtra Scooters, a Bajaj Holding, Tata Investment, just to name a few. Sundaram Clayton, by the way, as well, has done very, very well in the last 1 year as well, adjusting for that fixed investment that you've got, as well as the other shares that you will be getting for the demerged entity. Your view on holding companies?
Yeah, actually, that's another small pocket where we are positive on. So typically, I think most bull markets end with holding companies doing very, very well. So I think we are kind of building up towards that. And we have a few holding companies in our portfolio. Also, I think there is some policy move towards making delisting and demerging of these holding companies easier. But it's just icing on the cake. I think there is enough value in a lot of these holding companies.
Okay. All right, Manish. Thanks so much for stopping by and filling us in with your view on the markets. We look forward to having a chat with you in the days to come.